Okay, let's start, Chavinder. So, a very good afternoon to all of you who have joined us in the webinar on an important topic under compliance, that's BRSR. I am Ishan, your host for the session today. Welcome you on behalf of British Standards Institution. This is the second webinar in the series of our BRSR awareness program. And as we know that BRSR or BRSR core, these are the tools for communicating your ESG practices to the investor community and other stakeholders under the SEBI compliance basket. Today, we shall talk about one of the BRSR core KPIs, which not only falls under the assessment or assurance basket, but also is becoming part of a strategy for organizations spanning across various sectors. This KPI, which I'm talking about, is greenhouse gas emission. This is the KPI, irrespective of existing compliance, also prepares the foundation for moving towards net zero of your organization. And once again, for today's webinar, I have been joined by my colleague from Bangalore, Mr. Srinivas Babu Nagraj. He is also there to support me to share some insight on assurance practices and the global alignment of SEBI BRSR requirement with the other ESG frameworks, respectively for carbon emissions. So without any delay, let me take you through the presentation. Hope my slides are visible, Chavinder.
Yes.
Thank you for confirming. Before getting into it, a basic ground rules that during this webinar, the participants will be on mute and the session is also being recorded. In case of any queries, please write it down in the chat box along with your name and email ID so as we can respond it back to you along with the recording of this webinar. As I mentioned, this is me, Ishan, and I currently manages the sustainability operations in India along with the QHSE team. I specialize in net zero projects, GHG inventorization. I am also an assessor and trainer on various ESG standards, focusing on carbon and the GRI and BRSR related frameworks. Along with me, I have Mr. Srinivas Babu Nagraj, who is a seasoned professional with more than a 3.5 decades of experience with it. He comes with an experience in the industries like IT. He has experience in facilities management, construction sector. He has worked with various MNCs earlier like Wipro, Sodexo, CBRE. He is a lead auditor in 9, 14, 45, and also a contributor in ESG assurance and carbon assurance schemes for BSI. He has also been doing some decent work across the KPIs related to water, water efficiency, and waste management 10R related areas. With this, let me take you to the agenda slide. Likewise, we have circulated the learning outcomes during our promotions on social media. We have kept the agenda very simple for you. We will talk about greenhouse gases at large. We will talk about what is the SEBI requirement, which are the greenhouse gases important, what is scope 1 and 2 emissions, questions around the assurance, and then how you can plan and how BSI can support you. The important thing here is to give you a reflection back of the very first webinar that we conducted 1 month back, which focused upon what is the assessment versus assurance, what are the reporting timelines, what are the value chain and its compliance requirements, what are the steps involved in the reasonable assurance. I strongly recommend you to go through that webinar after this particular one so that some of the points that we will be discussing during this webinar, you can get a detailed understanding from the very first one, which has already been conducted. This scanner can take you through to the existing recording available on our YouTube channel. Moving forward, let's talk about on the large level of what is a greenhouse effect. See, we all have been familiar about it. It's nothing new. We have all been seeing it in our textbooks. The greenhouse gases were a supporting element for Earth atmosphere, for supporting the warming of Earth to make it a habitable place. But the additional element, the extra greenhouse gases which are emitted because of industry, manpower involvement, these are causing the stress. These greenhouse gases are the heat trapping gases, which is mainly responsible for maintaining a proper temperature around the Earth atmosphere. But if the concentration keeps on increasing, that is becoming a concern, which is causing us the increase in the overall Earth temperature. Now, what are these 7 greenhouse gases? Why we discuss about them? What are these gases? Who described it? So the 7 gases on which our focus should be when we are accounting for greenhouse gas emission or carbon emissions. These 7 gases are carbon dioxide, methane, nitrous oxide, HFCs, which comes out of your refrigerant leakages, air conditioning system. We have PFCs, perfluorocarbons, coming out from the aluminum industry. SF6, which is from your electrical switchgear, NF3 from semiconductor and electronic industry. IPCC is nothing but a group of scientists, Intergovernmental Panel of Climate Change. They came forward, they usually periodically publish an assessment report because they are the group of people who studies the climate. What is change happening? How much is the temperature rise has happened? How we can adapt with it? How we can mitigate it? They have explained that the TCO2 equivalent, which is a unit for carbon emission reporting, it while any organization reporting on their carbon emissions, they should be focusing upon these 7 gases, and together consolidating it becomes your total carbon dioxide emissions. Hence, these are the 7 gases which are need to be accounted while you calculate your carbon footprints. When it comes to the market drivers in India, the Security Exchange Board of India, SEBI, has decided that country's top 1,000 listed entities will need to submit an assured or assessed BRSR ESG report. Within that ESG report, GHG emissions is one of the key criteria. And if we keep the climate thing aside for a moment, although it's one of the most important thing, the investors now, this community is analyzing the risk on your businesses which might happen because of climate change. Investors, before investing money in your organization, they want to understand what risk you are managing when it comes to climate related challenges in future, and how you are impacting your external environment, external atmosphere. So greenhouse gas emission is also becoming a very important check for the companies, for the investor to invest monies in your company. And with SEBI coming up with a lot of new instruments like green debt securities, ESG funds, this is catching a lot of momentum these days. Greenhouse gas emission and those requirements within the SEBI ESG framework. Along with this, India has recently also launched its green credit scheme under India CCTS, Carbon Credit Trading Scheme, India Carbon Market, which is also supporting the India goal of net zero of 2070. So these are the basic market drivers. And this particular concept is sector agnostic. It applies to all sector, any sector you are working in, be it pharmaceutical, be it aviation, be it BFSI, be it banking industry, non-banking sectors, IT, ITS, or manufacturing. All have the carbon emissions happening either in your operations or across your value chain. So this concept applies everywhere. All organizations have it. Now, when we talk about BRSR core definitely a subset of it, which is a set of 9 KPIs under the assurance and assessment mandate. BRSR is largely divided into 3 sections. Section A, which talks about your general disclosures, means what is your organization, what is the service or product you are offering in the market, Who are your group companies, subsidiaries, JVs? Section B talks about the management and process disclosure, which is mainly on the policies existing in your company, the governance, the leadership, board people, who are them. Section C is the principal wise KPI, the performance disclosures, where the quantifiable data has to be submitted. So section C is of our interest. And within section C, there are two principles which talks about the carbon emissions to be provided to SEBI, to be provided to the stock exchange, that information. Now, when we talk about SEBI requirement on greenhouse gas emission, as I mentioned, this is covered in two of the principle. One is principle 6, which is a dedicated category for environment. Under that, there are again essential and leadership KPIs. The essential ones are the mandatory, and within that, SEBI is asking about what is the total scope 1 emission? What is the total scope 2 emissions? What is the breakup gas wise? What is your CO2? What is the component of methane? What is nitrous? The component gas wise, if it is available. Then SEBI is asking about the scope 1, scope 2 intensity, and that intensity on revenue from operation with respect to revenue from operations and with respect to total output of product or service. These are the essential one which falls under the assessment assurance mandate as well. And this is on which we will be focusing ahead. Under the leadership, it also asks about the total scope 3 emissions with breakup of gases and scope 3 intensities. This is covered in P6, and one of the another principle, which is P2, principle 2, it also asks about one of the leadership indicator, which is definitely not part of BRSR core, but yes, there is an indicator which talks about the life cycle assessment. Have you conducted any LCA of your product or service? Here on this slide, I would like to seek some comments from Mr. Srinivas Babu as well, that how companies should be relating it with the existing ISO, or comments from your end, Mr. Babu.
Thank you, Mr. Vishal. Hope I'm audible.
Yes.
So LCA basically it evaluates all stages of the product or service life, from the raw material extraction, manufacturing, transportation, use, and end of the life disposal or the recycling. What does it mean? It means it identifies carbon emissions and other environmental impact at each stage, not just during the use. This is the full scope, which actually reveals the hidden emissions, which is often missed in the operational reporting, either scope 1 or scope 2, but definitely it includes in scope 3 emissions. Taking the clue from this particular disclosure, the latest amendment in the ISO standards, with the inclusion of climate change for all the ISO standards, there can be a linkage from this place, so that the 4.1 and 4.2 clause of any of the ISO standards can be linked into here. That means LCA is a very key practical tool that helps organization to implement the climate change elements, which is embedded within the latest ISO standards, making climate action more measurable, manageable, and integrated into everyday business processes. Over to you, Mr. Rashan. Hope I'm answered this.
Thank you, Mr. Babu, for letting us know about the relevance of climate change clause with this LCA thing, which is already asked in the BRSR. Thank you. Moving ahead, let's talk about some important questions which needs to be answered. The very first where I want to focus is, what is the SEBI definition of scope 1 and scope 2? And does it cover specific standard to refer? When it comes to the SEBI's response against this query, what is a scope 1 and scope 2 definition? This has been covered broadly in a guidance note published for BRSR by SEBI, which says that scope 1 emissions are the direct GHG emissions from sources that are owned or controlled by the entity, where you have the ownership, where you have the direct control, direct involvement. Although this control term is a topic itself which can be discussed a lot in the detailed trainings, but for now at high level, where the ownership, the machinery belongs to you, the process belongs to you, you are the owner of that equipment. Whatever emissions are happening, it's a scope one. You are operating the boiler inside your plant, you are managing it, you are deciding the fuel, scope one. You are burning the diesel in the DG generator, asset owned by you. You are deciding, you are monitoring. It's a scope one. Then scope two, the emissions, the scope two emissions, this category is dedicated to energy indirect emissions. Energy indirect. Please note it. This category is dedicated to the energy which is produced outside your plant, outside your boundary, but you have used it as an end product, like purchase electricity, heating or cooling you have taken from outside. Now, this should not be confused by saying that LPG pipeline is coming inside my plant, whether it should be scope 2. No, because the LPG gas you are burning within your plant. So it's not scope 2, but the electricity which you are taking from the outside, somebody else is generating. That becomes your scope 2 because you are using it as the end product. SEBI also says entities may, on a voluntary basis, provide a breakup of the scope 1 and scope 2 emissions into various gases. And it says the unit for the disclosure shall be TCO2 equivalent. And entities should disclose the standards, methodologies, assumptions, calculation tools, and sources of emission factors. By this last line, entities should disclose the standards methodologies. SEBI has kept it open for organizations to follow the globally available standards. And when we see which are the globally available standards, the most popular measurement standards, and these two exist only. One is ISO 14064 Part 1, which talks about the organization level carbon footprint quantification. There is a standard which is ISO 14067, which supports the calculation for product carbon footprint, which is based on the life cycle assessment, LCA. And parallelly, GHG protocol, corporate accounting, reporting standard, and scope 3, its versions are also available. So in ISO, we have 14064 Part 1, which talks about organization level quantification, which becomes a standard for your scope 1, scope 2 quantification as well. A recent update which came 1 week back only, that ISO and GHG protocol, they have announced their partnership to come up with a unified global standards for GHG accounting. And that's a good news for the industries. Even if I can suggest that moving forward, when you take a training from someone, when you do some gap assessment or assurance, you can discuss with your partners to build up your knowledge in terms of telling you what is the similarities in these two standards, what is the difference in these two standards. Like that, you can prepare yourself. Coming to a second question, whether there is any existing or additional guidance available by SEBI? The answer is yes. SEBI, in its one of the recent circular published in last year, December, they have talked about some of the BRSR core reporting standards and elaborated it in a little more detail. This is a group of 3 companies, SOCHEM, CIN, and FICCI, who came towards and they have released the industry standard note on BRSR core under the Industry Standard Forum. Taking this ahead, there's an important thing to understand. Does the SEBI has specified any calculation methodology or emission factors to be used? So this should be answered by first at your end to understand the fundamental equation for calculating the GHG emissions. That is activity data into emission factor. Now, what is an activity data? What is this jargon? This is nothing but the fuel that you are consuming at your site, the refrigerant leakage data, the fuel burned quantity in kg, liters, SCM, the consumed electricity, the refrigerant leaks. These become your activity data. And emission factor, they are the ones who relates the carbon emission with the activity data. That this much fuel I burned, this much is the carbon emissions made by my organization. Basically, emission factor is a rate of release of a gas by burning a fuel of a GHG gas. Now, for activity data, SEBI focuses that it should be a site-specific data. If it is not available, it allows you to use the secondary elements as well, like calculation based upon the square feet, calculation based upon maybe the national building codes, the thumb rules, but focus is on the site-specific. And one of the annexure of BRSR core, it talks about the fuel quantity, absolute quantity, the total consumption of electricity or the purchased energy. It talks about that. When it comes to the emission factor specific, it was cleared in the industry standard forum guidelines that when it is on the scope 1 emissions, the organization can use the emission factor or the sources for emission factors for their latest available guidance. They can use the guidance from the NABL accredited labs, then IPCC Intergovernmental Panel for Climate Change, which publishes the global warming potential in the assessment reports. Organizations can use IEA data. UK DEFRA emission factors can be used. US EPA country-specific factors can be used. What SEBI wants is, whichever you are using, it's necessary that reporting entities disclose the source of emission factors. Under scope 2, SEBI says that for scope 2 emission, please do go ahead for your grid power emission factor given by the CEA in India, Central Electricity Authority. And at the activity data side, if you do not have the exact consumption numbers, you can also use a spend-based methodology for time being. So the focus of SEBI is on site-specific data, but in case you do not have the practice to record at site at the moment, there is a liberty given to use a spend-based factor as well. But it's clear in the SEBI guidance, which are the sources that you can refer. Moving ahead, I would like to understand now from Mr. Srinivas Babu Nagaraj some areas related to assurance. The very first question to Mr. Babu is, what are the assurance requirement by SEBI on these parameters? Over to you, Babu, sir.
Thank you, Mr. Rishan. SEBI requires the listed companies to disclose scope 1 and scope 2 GHG emission, which is again part of the BRSR Core 9 principles. However, these disclosures it must be assured or assessed by an independent third party. Assurance or assessment should be conducted as per the recognized standards like ISI 3000, and SEBI expects this disclosure should be accurate, reliable, and consistent. At the moment, BRSR Core 9 is a mandatory disclosure from all the listed companies. And for the value chain partners, it is voluntary. However, what we have seen is many of the companies, listed companies, they have started talking to their value chain partners. Number one is to increase the awareness. Number two is to enhance the capacity building. And more importantly, to understand the gap with respect to their GHG inventory calculations. They have already started doing all these things. You can also watch our webinar, the first webinar, for more insights on the various value chain reporting, the framework, the detailed guidelines, etc. So on. Hope I have answered the question, Mr. Rishan.
Yeah, thank you. Thank you, Mr. Babu. So if I summarize, then it means that companies, irrespective of listed or coming under the mandate, they are increasingly making the sustainability people, EHS people aware about how to go for the calculations, because they understand now this is becoming a very important checkbox for them also. And it's since compliance are increasing, they have to go for it. Okay. The second thing which I want to understand from your end is the focus as an assurance provider. while you are assessing the GHG assurance activity when you are delivering this engagement, what are the focus areas?
Thank you, Mr. Ishan. As I was communicating in the last slide, we follow the assurance standard of ISA 3000 mechanism and SEBI's requirement on the data accuracy, completeness, and consistency. More importantly, we look and verify whether the data what is produced for verification is it accurate and it is complete, whether all the relevant emission sources have been identified and included. Are there any double counting? Are there any significant omissions? We also verify the methodology and the calculation approach as such, because again, that's again a requirement to disclose the references and the various emission factors where it is taken from. So we review also the method to calculate the emissions, and then we confirm whether the appropriate emission factors and the conversion factors are used. Some places there could be some assumptions or estimation techniques, uh, especially for the indirect emissions or where there is no data available. So we verify that methodology also. More importantly, we focus in terms of verifying their data management and controls. How the data management system is there, and what are the process which is followed, what are all the internal controls which is established to ensure there is a robust data collection and data processing data process. Then how quickly, how easily the records and the data sources are identifiable, and how reliable are those data sources. For example, if there is an energy meter which is used to be verify whether those energy meters are calibrated or not, we verify the calibration status. We also verify the fuel purchase records and various other invoices. We also verify how the records are maintained, how the documentation is maintained, how how the traceability of data is established. And of course, the consistency is more important to verify, because the reporting methodology versus the previous reporting periods, whether we will see whether is there a significant change, is there any explanation with respect to those changes. So if I have to summarize, we verify the data accuracy and completeness, validate the methodology and emission factors, assess the complete data management controls, and to ensuring consistency and complete compliance with the standard requirement. So this is the approach what we are going to take. Hope
Thank you.
I
Thank
have
you, Mr.
answered.
Yeah, thank you, Mr. Babu. I think very important one word which I've picked from your response is the traceability of the sources. So if somebody is showing you that this is the value, this is the activity data, or this much is the consumption happened, so you tend to establish the traceability from various evidences, be it maybe SAP software, be it maybe the actual practical invoices, or be it at the on-site consumption registers, measurement. So the traceability word is very, very catchy. I just wanted to use that traceability of evidences. Thank you. With this focus of assurance providers, I also want from you to understand the challenges as an assurance person you face usually on the sites when you are delivering the assurance engagement. So would request something on this end as well.
Thank you, Ishan. See, the challenges, it's almost common across the various sectors where I have been assuring the ESG reports for many organizations. The lack of understanding is the first thing which I would like to state here, is because even though the BRSR is not new, it is not too old, but it is still evolving. Clarity on certain requirements on the matrices are a little limited at this moment of time. So organization some are struggle to keep a pace with the updates or changes with respect to the regulations. Keeping this apart, what is more important is here is the incomplete or the inconsistent data. there are many errors in terms of the collection and reporting the data points between the functions, between the subsidiaries, between the entities, between the locations. If it's a multi-site organization, and many a times there is a missing documentation, poor record keeping. We said we will do the traceability and we verify the sources of information. Many a times the invoices will not be available. Many of times the estimation used or the methodology used uh, is not is restricted to a person. If he is not there, nobody knows how those values have been arrived. And though there are policies, though there are SOPs which are developed within the organization, uh, incorporating this data verification, data collection process, especially from a GST accounting point of view, uh, that needs to be little strengthened. Overall, if I have to summarize, data quality and availability issues, lack of standardized approaches, and then subjectivity in the qualitative areas. More importantly, uh, the not leveraging on the existing ISO 14001 or ISO 50001, because those certifications or those framework will definitely help the organization in ensuring especially the data consolidation and the data accuracy point of view. And the other one which I will have to state here is the timelines for the assurer, because many a times it's a last minute finalization. It could be delay in starting. Uh, uh, it could be delay in terms of the data capturing process, delay in terms of ensuring the closure of the gaps which were identified during the assurance process. These are all the predominantly challenges as an assurer today. Hope I have answered the question,
Yeah.
Mr. Vishnu.
Yeah, thank you, Mr. Babu, once again. So I have noted down 3 to 4 important points. One, you have mentioned the pace with updates and changes in SEBI guidance or SEBI circular. That's a very important aspect because yes, it's still evolving and we might see some new things coming up, new methodology, maybe new guidance documents also. Second is the team's awareness, the team's understanding on GHG standards, maybe not seeking answers only from AI, but yes, the team's awareness on actual standard requirements. Third is the management systems leveraging. So these are the 14K, 50K, 45K. These are the management system, which establishes a discipline within the organization in terms of policies from the planning till the implementation and continuous improvement. So leveraging them for the carbon management and then timeline in the consolidation of data. It should not be in a very hustle manner. It should be done timely so that the assurance providers also have time to do the data verification properly. Okay, thank you for the same. With this, one more query where a lot of questions usually comes to us is how complying with BRSR related GHG emissions requirement, if a company, if an organization is doing their GHG emission, how does it supports or complements your journey towards net zero? And the second is if X organization, be it listed, non-listed, they are doing the estimation of carbon emissions, greenhouse gas emissions, does the BRSR requirements aligns with the global framework requirement, let's say GRI?
Thanks, Ishan. It's a great question. I'll just little explain it in uh, the first phase is more with respect to the scope 1 and scope 2. Yes, accurate scope 1 and scope 2 emission data will definitely provide a clear baseline to understand any organization the current carbon footprint. Because that is more important in terms of ensuring the baselines are correct. If the baseline is wrong, then the whole exercise or the whole way forward could be a wrong thing. And transparent reporting builds credibility with the stakeholders, be it an investor or the regulators or customers, and sets a foundation for any company's emission reduction planning. Of course, the accurate emission reporting is a prerequisite. And scope 1 and scope 2 emissions in the BRSR, the verification approach, which follows the ISO 14064 Part 1, and the BRSR environmental disclosures, including GHG emissions that map closely to GRI emission standards, which is GRI 305, which includes uh, qualitative and quantitative disclosures on direct and indirect emissions. And more importantly, the consistency in the boundary setting and the emission intensity metrics. This whole alignment, ensures companies to use consistent definitions, boundaries, and calculation methodologies, which is recognized globally. So, if I have to provide the document what is appearing on the screen, this provides an information on how the GRI standards are linked to SEBI's BRSR framework. I'm proud to share that BSI is one of the leading contributor for development of this document. Hope I have answered your query, Mr. Rishan.
Yeah, definitely, Mr. Babu. Thanks again once for giving me the bulleted points. One important thing related to how this supports your net zero or neutrality is you highlighted that the with the help of these standards, the baseline can be established. So once the baseline is established, the companies can decide or define a path how they have to reduce it year on year and how they can embark their journey on net zero or carbon neutrality. So that's a very important point because a lot of GHG programs, be it ISO or be it neutrality requirement or net zero or any other, they have certain additional requirements. But the fundamental thing is they all ask for what is your baseline data against which you want to take the targets towards reduction. So that's a very
Exactly right.
important point. And thank you again for explaining about how the GHG requirements which are there under BRSR, they also maps with the global frameworks. One example is GRI. It is very much visible on the screen that it is asking about GHG emission in tons of CO2 equivalent, asking about the breakup of gases. Similarly, it is asked in BRSR. It is asking additional element like base year, sources of emission factor is something it is asked in BRSR as well. So I think it's more comprehensive, but yes, BRSR is also not specifying individually for India, but yes, it is talking to you to use the globally available standards for greenhouse gas accounting, which is the similar common language available in these global frameworks. One is GRI. Thank you. With this, I would like to take you on the path forward to learn and how BSI can support your journey and what are the standards available in our ESG bucket. So this is just a high level 4 steps which I have broken it down that how companies can start coming on to the BRSR GHG requirements, how they can prepare themselves. They can start by identifying the sustainability team, who will be the people, who will be the single point of contact, who will be the project managers, who will be gathering data from multiple departments, multiple functions, because this will include the involvement of utility guys, the involvement of purchase team, involvement of maybe transport team and admin team others. Then identifying the sustainability team. After that, the capacity building of that sustainability team on calculations and standard requirement. What does this standard ask? What are the methodologies? How they can calculate? From where to select the emission factor? What are the sources of factor available in India? What emission factor to be selected for a different kind of fuel with a different calorific value or different different fuels, what are the emission factors to be selected. So capacity building of sustainability team is very much encouraged so that they speak the same language what standards are asking. Then preparing the GHG report, you calculate the data and you can get it gap assessment done by some assurance providing bodies who highlights you what are the gaps when you compare it with the SEBI requirement. And the last is you can definitely, if you fall under compliance, you can obtain the assurance to meet the compliance requirement and gain the customer trust. If not falling under the listed bucket, still you can opt for the assurance that adds the credibility to the carbon numbers before you release it in the public domain or with your stakeholders and also gives you confidence. With this, I would like to take you to the products available under the ESG basket within what BSI offers on. BSI offers assessment, assurance, training on the products falling under the ESG basket. And any ISO product is right now supports the business sustainability. Organizations wants to implement, suppose digital security that falls under the governance umbrella. Organizations wants to ensure the occupational health and safety that falls under social umbrella. Organization wants to implement the LCA that falls under climate change. So when we talk about ESG broadly, within e-basket, we have the flagship standard 14K, 50K, and then the carbon basket, which is 14,064 part 1, talks about organizational level. We have 14067 footprint at product level, then neutrality and net zero guidelines. Then we also have this water related water efficiency management 46,001 water footprint for sustainable finance for NBFCs BFSI 14,097 talks about the GHG management for financing the activities related to climate change and 32010 which talks about guidance on sustainability principle for the financial sector. So under the climate change, these are the one, these are just the high level. There are others as well. Under the social, we have social responsibility, SA 8000, health and safety. Under governance, good governance is information security, 27001, AI management system, BCMS, business continuity, risk management, 37001, anti bribery, etc. And under the ESG assurance, we provide trainings and assurance services on various reporting frameworks. This is our service at a very high level where we have showcased that the management system certification 14K and 50K because these are the management system. Then verification, which is for related to the carbon related standards and ESG. Then training is provided for all of them. Then we have product certification and gap assessment that companies can take against the different standards. We also have our ISO 14064 qualification pathway that companies or as in-house or in the public batches can participate and increase their understanding and qualify themselves to work as a professional for accounting the greenhouse gases, be it for their companies, so that they can contribute more to the global vision, mainly the India vision of net zero accounting correctly, talking about the same principles. With this, I would leave you all with a poll question, which my marketing champion Shavinder will be releasing on the screen. I would request you to respond to that, and then we can take some questions which Shavinder has recorded as the initial questions came during the registration. Shavinder, over to you. Shavinder, did you release the poll? I hope the poll question.
Yes, hi Chan. I have launched the poll question. I request all the participants to please on the screen you can see the poll. You just have to give your response over the poll. If you are unable to see the poll on your screen, then I request you to please go to the chat section and there you can give your response. Thank you.
Mr. Rishan, I think you are on mute.
Thank you, Mr. Babu. So the poll is closed now, and I would like to highlight that I think, Chavinder, you have some questions that you have received as a pre-registration. Can you let us know so that we can respond, or if you have any questions in the chat boxes, we can take.
Sure, Ishan. So the question number one, are there any ISO standards for net zero neutrality?
Okay, so let me answer this. So yes, there are standards which talks about the net zero pathway and carbon neutrality. I have shown it in the one of the slide. There is a standard called 14,068 Part 1 2023. It was launched in 2023 in COP28 or COP29 in Dubai. This was the standard where BSI also work very aggressively and as a body who chaired the development of this standard. So yes, there is a standard of carbon neutrality already, which supports that organizations who are doing calculation using 14064 Part 1, they can, with some additional elements involved related to neutrality, they can also go for the certification. And also there is a standard around net zero guidelines. It's not the fully fledged ISO standard now. It's IWA, International Workshop Agreement 42 net zero guidelines. But yes, this is scheduled to be an ISO standard in 2026 in the upcoming COP30 or COP31. So that will be a fully fledged standard which will support the organizations who are doing their inventorization using 64 Part 1 or any other global standard. They can also go for the net zero related claims following that standard. So yes, two available in market. Thank you, Chavi. Over to you.
Thank you, Ishan. The next question is there any carbon management system standard available like Energy Management 50,001?
Let me take this question.
Sure.
It's a really great question. Unlike, see, ISO 50001 is already fully developed and widely adopted. There is no single dedicated ISO standard solely for a carbon management system as such, which works like exactly like what ISO 15001 for energy. Does it mean there is nothing exists? Yes, there exists ISO 14064 series, which provides guidance and requirement for quantifying, reporting, and verifying GHG emissions. But it is not a full-fledged a certifiable management system like ISO 50001. But it focuses more on measurement and verification than a systematic management process. There is also ISO 14067 and ISO 14040 or 144, which also focuses more on the product carbon footprinting and life cycle assessments. And of course, ISO 14001 is also there, which provides a broader framework for managing the environmental impacts, including the carbon emissions. But again, these are not specific to carbon management. But however, the organization can integrate their carbon management practices to either 14,001 or 50,001 by adding specific carbon related objectives, measurements, and reduction targets. There is an increasing industry demand for a dedicated carbon management system standard, but as of now, there is no dedicated ISO standard. But few organizations, they have customized and developed their own uh, CMS, the carbon management framework, we call it as the carbon management system, based on the existing standards like 14,001, 50,001, combined with their internal policies and uh, taking a couple of clues from the GST protocols as well. So there is a growing importance from a climate action point of view, which may lead ISO or any other standard bodies to develop a formal carbon management system, maybe in the future.
Thank you, Mr. Babu. Chavinder, any last questions from your end?
Yes. The next question is, when is the new ISO 14001 update is expected, and what are the potential changes, or is there any major updates?
Thank you, and I will take this question. The upcoming ISO 14001, which is expected to be published in somewhere between January 2026, with a transition period of approximately about 18 to 24 months, because it is still in the draft stage. The draft and the key updates are available in the ISO website. Interested can download those the draft standards. Here, what I have read and understood from that is there are a couple of uh, uh, there is no major new requirement, but there is an enhancement with respect to the clarity with which is seen in the draft ISO 14001. There is an enhanced emphasis on the climate action, which will definitely aligning with the global sustainability goals. There is a life cycle perspective. There is a stronger focus on considering the environmental impacts throughout the product and the service life cycle. There is an enhanced clarity with respect to the risk-based thinking. They have separated it out, the environmental risks and the opportunities. The leadership and accountability, there is a clear expectation from the top management involvement in the environmental performance. There is a supply chain sustainability. There is an encouragement with respect to the organization to engage their suppliers with environmental matters. And of course, digitalization is also being focused in terms of the use of digital tools for monitoring and reporting the environmental performance. This is what at this moment of time I would strongly recommend. You can download the draft and even provide your inputs also with respect to the standards.
Thank you. Thank you, Mr. Babu. And I can also see some questions in the chat box. Maybe I can answer quickly a couple of them. One question asked by Sunil is, what is the difference in GRI and BRSR reporting? So, Sunil, I would say, in a simple terms, GRI is more comprehensive, more detailed, a kind of a subjective question paper, whereas BRSR is specially made for the Indian context, maybe an objective paper, you can say. The companies who are working at a very global level, they have their businesses in India, outside India. They also use a global tool for communicating, for easily understanding, which is recognized at a global level. BRSR might not be recognized at a global level, but these are both the tools for communicating your ESG related work to the society. So if the company is working in India, they have their product sold in India, BRSR is good to go and must to go. And if companies are working both in India as well as in global market, GRI is something they can start with. They can extract the information and fill the BRSR format as well. So one is a more detailed, one is a kind of less comprehensive, objective, but very much focus on the quantifiable data. The second question is, what should the sustainability teams prioritize to ensure a smooth assurance process? Mr. Babu, you want to add something? Maybe a gap assessment they can go for so that they have understanding, or for a smooth assurance process?
Many organizations, what has been done is, though they are not listed, they have engaged BSI just to get a feel of the experience on how the assurance process is taken because again, as I told earlier, it is still an evolving and understanding is an issue. So the gap assessment in terms of the whole verification process in aligning with the assurance standards on ISA 3001 and verification with respect to the BRSR Core 9 principles would definitely help individuals and organizations to be ready for the assurance process.
Thank you, Mr. Babu. So I can see a question that what will be the impact of GHG and ISO collaboration on GHG inventorization? Okay, so this is, I would say this will be very early to talk about this, but yes, I don't see when I have gone through both the standard, be it 64 part 1 or be it GHG protocol many, there are not too many of differences. The differences are only in terms of a little about the terminology or about the naming convention. ISO calls it category 1, 2, 3, 4, 5, and 6. And GHG calls it scope 1, 2, and 3. And they have further divided scope 3 exhaustively into 15 biparts. And ISO category 3 to 6 is similar to the scope 3 category 1 to 15. The point is, no, not too much differences still in ISO and GHG, the people who understands it. But yes, it will be interesting to see how they will collaborate together to come up with a unified one. I think they want to simplify, they want to ease out, they want to make it easy for the organizations, also for the ESG reporting frameworks, because a lot of the time ESG reporting frameworks are also particular about using a standard. So they want to unify it. With this, I think
Yeah.
we are we are bang on time. We are good to go. Once again, thank you all for joining this session with us. We will keep on coming with such informative webinars in future. The upcoming webinars will be covering the areas related to waste, water, and governance, the trading house, the MSMEs, what are the guidance around it. Do see our very first recording, very first webinar available on YouTube, and see you in the upcoming next webinars. Thank you once again.
Thank you, and thank you all for joining. Hope to see you soon in the next webinar. Thank you so much.
Thank you.